My name is Liam, and this is the market roundup for the 26th of Feb 2021. Well, I warned yesterday that today might be a tough trading session for Asian markets, and boy was it. The Nikkei was down 4%, the Seng nearly as much, whilst in China and Australia they were down a mid 2%. Europe showed they could do it nearly as well, the French CAC down 1.4% and the German DAX 0.6%, whilst the FTSE 100 showed how to close out the month in style with a 2.5% drop. In fact, there were just 3 stocks out of the FTSE 100 that managed to gain on the day, as Consumer Group Reckitt Beckinsale, Airline Group AIG, and DIY store Kingfisher. That's it, 3 out of 100 stocks. Top of the naughty list of 97 fallers were housing and mining related companies, a combination of profit taking and nerves about recovery. BP and Shell also featured for similar reasons. And the insurers M&G and Legal and General also feature, again, having had a decent run up recently. I did use the modest pullback in Everest to pick up some shares today, so at least soften the blow a little bit for me. The FTSE 100 may have fallen further had it not been for some long-awaited sterling weakness, which means that when many of these companies convert their international revenue back to pounds, it goes less far. A weaker pound now means it goes further. Simple. On a domestic focus, FTSE 250, things weren't that much better though, falling 1.4%. Pets at Home was a standout, delivering great results in their financial update. Pet stores are classed as necessary in the UK and so have remained open, and people have been enjoying spoiling their animals during lockdown, apparently, which I guess is kind of heartwarming to hear. Other winners were more domestic-focused recovery stocks such as builders, merchants, and bingo halls in the shape of Grafton Group and Rank Group. Fallers were investment trusts with heavy tech exposure, more mining and oil companies, and finally investors seeing sense and ditching Cineworld after it was evidently too cheap to pass up earlier in the week. As an aside, I never realized just how many mining companies exist in the FTSE 350 before doing this segment. Over in the US, there was some life after a difficult couple of days, really. The NASDAQ even managed to claw its way to a 0.5% rise. IBM and Salesforce, though, did their best to bring on the return of the bear, falling 3% and 6% respectively. I have a tiny stake in IBM, and I do feel it's undervalued, but I'm going to wait to buy it and when there aren't so many premium options on offer. I did also consider Salesforce today, but felt the risks of it digesting Slack weren't really worth my hassle, and I just wanted to add Microsoft and Broadcom on a small wobble, especially Broadcom, a company I've coveted for a couple of months, really. Most major stocks saw some modest recovery, including Amazon, Apple, Microsoft, and Google trading under Alphabet. The Dow was definitely more depressing, falling a further 1.5% after seeing all-time highs earlier in the week, whilst the S&P 500 joined the losers index, falling 0.5%. Notable fallers we've not mentioned much before: Procter & Gamble, Johnson&Johnson, and JP Morgan, all down more than 2%. In fairness, they're all fine companies that have been doing great recently, and they did start to feel a bit overvalued. I mean, that said, I own Johnson&Johnson and JPM, and I would happily consider P&G, but was too distracted with tech shopping for this week. Bitcoin slipped a little further to $46,000, but always has a graph up and down more than an escort's knickers, so who really knows? Currency gave a little respite to us British investors with American shares, with the dollar strengthening against the pound and back under 140 again, largely off the back of the Bank of England's chief economist sounding the alarm about inflation, saying it was going to come in both earlier and harder than consensus suggests. Quite normal consequences resulted from such words. So we close out the week and the month probably on a bit of a downer. It feels like January all over again. Will it recover, or after a near-decade bull run, is the music about to stop? Join me next week and find out. Thanks very much, and good luck with your investing.